Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, after NFP yesterday, we got to see a good recovery on the chart of DXY. The NFP was good, DXY showed good recovery, but after some time we saw strong price rejection from above and DXY came down to the level from where it started. You can see here dollar jumps as US data, US job gains, wage growth beat expectation. Dollar jumped on Friday after data showed that US employers added more jobs than expected in April, while wages also grew more than economists anticipated. Employers added 253,000 jobs above economists' forecast for a gain of 180,000 jobs. NFP was good. As a result, DXY also showed recovery, but the price failed to sustain and immediately came down, and ultimately DXY closed at 101.28. This is the current market price. So the chart structure of DXY US dollar index is still the same. Still, DXY is under the dominance of sellers, so as a result, the road will not be very smooth for DXY. As we can clearly see on the chart right now, the DXY is stuck inside a range. The range is 100.80 on the downside as a very critical support, because if DXY breaks this support, then things will be very nasty bad for DXY, because there is no immediate support below 100.80. And then we have got 102.30 as the level of resistance for DXY. So this is the range of DXY, and I think during the first half of next week we will get to see DXY within this range only. And for the last couple of days and weeks, we have seen that DXY is giving its best fight to maintain its position level above 100.80. So let's see how DXY performs in the coming week. But right now DXY is under the dominance of sellers and things are still not positive. DXY is within the range. And this is the Forex chart of gold USD in front of us, and we can see that right after NFP there was a big drop on the chart of gold. Gold made a low of 1999, and after that there was some immediate signs of recovery, and ultimately gold closed at 2016. This is the current market price here. If I zoom out the chart, you can see that the overall structure of gold is still very much intact. For the big players, or if you're a swing trader, positional trader, if your trades last for a couple of days to weeks, then your structure is still not your structure. The structure of the chart is still the same. You can see that gold is still trading inside an upward channel, and therefore the strategy is still the same. That is, okay, buy at support. Okay, if you are a swing trader, if your trades last for a couple of days to weeks, so what you can do is you can easily go for a buy around these areas and you can ride the swings for a couple of days. But if you're a day trader, then obviously you need to be very cautious, because I'm also a day trader and usually our stop losses are very small in comparison to swing traders and positional traders. So yesterday we could see that gold took support around the 50 and 100 moving average, and around the area we also had Fibonacci 23.6% retracement level, and we can also see that the same level also acted as previous resistance. So previous resistance acted as support. Then we had moving averages. So overall buyers were present and market got the support it was asking for. So on Monday, if market shows a downside, the best support is around 1971 to 1966. This is the best support on the chart of gold USD on the chart right now if market shows a big drop on Monday. And the reason is we have previous support around this area, as well as we have Fibonacci 38.2% retracement level. If we combine all the factors, then if market drops also, we can expect that this level should work as a very strong support for the market. And if we look at the chart prime, this is the hourly chart of chart prime, you can see that the signals generated by chart prime were on point. When there was a drop in the market, chart prime generated a possible reversal signal, and we could see that market started going up. And when market made a high of almost 2080 after FOMC, there was a possible reversal down signal from the chart prime. My dear friends, these signals from chart prime are very good. I won't say that they are 100% accurate, but to be honest, they are a very big help for any trader. You can also see that apart from the signals, possible reversal down, possible reversal up, okay, you can see that apart from these signals, the multi-time frame support resistance is also a big help for traders, those who cannot afford to give much time to the market. Okay, you can see these lines are drawn from all the time frames, so as a result, this is also a big help. The oscillator is also one of the most amazing tool of the chart prime if you know how to trade on divergence. Instead of RSI or stochastic RSI, okay, you can use this tool, chart prime oscillator. It also generates overbought and oversold levels, and it also shows you the divergence. So you don't need to work additionally, you don't need to put extra effort to find out divergence. The indicator does the job for you. Okay, it shows you the small divergences, big divergences, hidden divergences. Okay, it's an awesome tool. Those who don't know about chart prime is a custom indicator tool right now rocking the trading community because of their awesome tools. You can see here they generate reversal signals. They also have chart pattern detection that I'll be showing you in some other videos. They also have the smart money concept, multi-time frame, support resistance that I showed you, then the oscillator. Okay, and they also have chart, not the chart, the candlestick detection. Okay, that is also very nice. They also have a community on Discord. Feel free to check them out. The link is in the description. You can also use the QR code on the screen right now. Okay, now gold. So my dear friends, as I said, the best support on the chart of gold is around 1971 to 1966 because of the previous support around this area, as well as Fibonacci 38.2% retracement level. And if you're wondering about the trend line, okay, why I'm not talking about a trend line, then let me be clear that market has been testing the trend line for trend line too many times. So as a result, there is a high chance that next time when market will drop, market may not respect the trend line, market may go for some SL hunting, and we can get a bounce from the 1970, 66, 68 level instead of the trend line. So as a result, I am not talking about a trend line, but in case the volatility of the market remains very slow, when market is, let's say market is coming down and the volatility of the market is very low, in that case you can expect the trend line to work not as a complete trend reversal. At least you can expect to make 40-50 pips around the trend line. Okay, but to be honest, personally, I will be avoiding the trend line. I'll be looking for buy around 71 to 66 that I just mentioned. And one more thing I would like to add here is that on Monday, if market breaks 1993 level, if market breaks the level, sorry, not 1993, if market breaks 1999 level on Monday, the low made by the market, you may get a quick selling opportunity. This trading is for day trading, for scalpers or day traders only. So if market breaks 1999, and if you see that the selling pressure is good enough, you can look for a quick sell and you can exit around 1996. Because again we have some minor support from the 200 moving average around 1993 level, so no need to take huge risk. Okay, if you see that okay, market is going down, the selling pressure is also good enough, you can look for a sell below 1999 and your target can be 1996. Okay, that is also one of the trading opportunity on the chart of gold if market shows a downside on Monday. On the other hand, if you see that market is going up on Monday after the market opening, then we have got some selling opportunity around 2033 to 31. This is one of the level where you can expect the market to face some selling pressure. And if you're wondering what is the reason, then I can show you that if we draw Fibonacci here, then you can see that we not only have Fibonacci 50% retracement around this area, but this level also acted as previous support. So Fibo plus previous support to act as resistance. So 2033 to 2031 is also a good level where you can expect some selling pressure, and if market reverses, then you can also look for a sell position. My dear friend, always keep in mind that no level is permanent in the market. Probably you have heard me saying this stuff thousands of times, but again I will repeat that no level is permanent in the market. So as a result, confirmation is extremely important. If you are planning to take a buy position at any support level, always wait for some time just to check whether market is taking support or not. If you see that market is showing price rejection from below, market is showing hammer pattern, bullish engulfing pattern, bullish pin bar, anything like that, anything will do. Okay, but yes, confirmation is essential. Once you see that market is taking support, then only go for a buy. On the other hand, if you see that market after hitting a particular resistance level, market is struggling to go up, market is showing price rejection from above, then only go for a sell position, because that is the confirmation is always important. After all, this is our hard-earned money, we cannot gamble with it. So always keep in mind that capital protection should be your first priority always. So these are the trading opportunities that I see on the chart of gold right now. And again, I'll be coming on Monday, okay, after the market opening. If anything crazy happens, obviously I'll update you. Okay, anyways, enjoy the weekend. Bye bye, take care.